yesterday we had job openings for April, so a month behind, and it was forecast to show a drop to 11.4 million, and it came in right at that expectation, which was down a little bit from March. Meanwhile, some 4.4 million Americans quit their jobs in April. That was little change from the previous month, with the so-called quits rate unchanged at 2.9%. So we're seeing a reshuffling in the job force. There are almost two jobs for every available jobs for every person that wants to work out there. So the job market is what we would call extremely tight. That is a good thing for the economy. However, jobs are a lagging indicator. And what that means is that when the economy starts to weaken, jobs are kind of the last thing to go down. Because, as companies start to hunker down, as their profits start to shrink, they start to look for ways to keep their profit margins good, to keep their companies healthy so that they can survive through lean times. Manufacturing PMI also came out for May. Economists were expecting a small drop to 54.5, but it unexpectedly rose to 56.1 in May of 2022 from 55.4 in April. And it beat the forecast. So that was good. Faster increases were seen for new orders, production, and inventories. So that is a positive thing that's happening in the economy right now. Today, we got out ADP private payrolls. So the private sector employment rose by just 128,000 for the month, and it fell well short of what the experts were predicting at 300,000. Folks, it is a very tough thing to be an expert in the short term because, we see every day that most of the time they're wrong. So that's one of the things that we here at the ministry, we are in the long-term planning side of things. So, the longer vision that you have, the higher the probability you are of being right in your strategy and not letting these temporary things really get you off. We also saw continuing jobless claims come out, and that is a proxy for the total number of people receiving payments from state unemployment programs decreased for the week ending May the 21st, which is, a week lagging. So the housing market has continued to cool. The job market is starting to, I think, peak out. Again, that is a lagging indicator. So we are starting to see a slowing in the economy. That is what the Fed is trying to do. They're trying to slow inflation. Inflation is the number one issue that we have going on right now, and the Fed is raising rates to try to do that. And then we are also starting this month with the Fed's quantitative tightening, which I think is going to produce the biggest results in trying to slow the economy.